Right, just recapping the two trades from oil. Right, from last week on day two, we're looking for a long trade because here we've had a rejection from the low of the week, a false break reversal with the new peak formation going higher. This now becomes day one. We're looking for, and as you can see, we spiked below the prior day's low and closed back above. So that shows these traders are potentially trapped down low. Price could now go up into the high. Price can now go up into the high of Tuesday because that's where the money is. So come in to the markets on Friday on the 5-minute time frame. On the first break of the 20 EMA in the New York session, there weren't a really, well, you could have entered, but there's not a true entry here because there's no low spiked. We do have the W formation, a short on W, but because this is only a slight break and it has the big wick to the highs, you would most probably be putting a line across there and waiting for the break until you actually enter. If you do enter and you look and it's 1% loss, it's no problem because coming into the middle of the New York session then, just after 2 o'clock, after the equity hours have opened, we have a bigger drive through into the low of the day, also a bigger extended W with a nicer break of the 20 EMA. Instant entry on that, we did close back below, but then the candle after that was explosive. We've got a nice 3 to 8 risk to reward. We could take the numbers, high to low bodies. We've got a 2 expansions just before at the numbers. And then coming into today's price action, as I've said, this is day one. Now this is day two. It's only day two after the market presents itself, so this is not hindsight. So we've got day one, day two, coming into day three now in the London session on the 5-minute. I take this back here. There is a potential trade entry now because we have the high spiked on day three with the shortened M closing back below the EMA. But because this is just a close on the EMA, I'd be looking for, again, as I said, the last with the why I didn't enter this one. That's why I didn't enter this one as well. We'd have to wait for a clean break of that level. We then just got a tiny break down low and a rejection up high, so I'll be thinking now, right, it's no point entering the trade. Could enter here now because you've got a 1 drive and you've got an M, where I wasn't at the chart for this particular time, but any entry around there is okay. But this is where I did enter, where price did blow off. So you've got the half Batman now, we've got the 1 drive higher and the 2 drives lower. There's no numbers on this 5-minute candle, but you don't need that because you've got the hundreds already hit in earlier on in the session. So if you did enter here with a stop loss above there or here with a stop loss above there, you're fine both ways. This was the entry though on the 3rd drive, and it's an M formation. Also we had a break in structure here. And then trade management, the first candle came up and didn't close above the EMA, which the next one, bearish engulfment down, price should blow off very fast now. And that's what price did do, blew off very fast down into the lows, into a 5% trade. This is a 5-star setup. This is a 5-star setup due to be in day 3, so you've got 2 to 3% risk on this trade with a 5% risk to reward. You're looking at 10 to 15% profit. And then on this trade, you'll just be doing your 1% risk because you could do more than that, but personally I would be doing a 1% risk with a 1 to 3.8. So in 2 days, you're making a nice bit of profit. And then the reason to get off the charts then after you've made the trade, because there was a potential for some low-hanging fruit on this setup. We did get a 3 drives, 1 drive, 2 drive, 3 drive for the close back below the EMA. If you enter in this, the stop loss got to be above the very highs, which you would have had the 1, 2, 3 drives, a bit of consolidation, not the best price action to trade in, but then you did have the drop off in price, and then the consolidation down low with a pin hammer. You're out of the trade here with only a small 50 to 70 pip profit. Price then came up and done another pump and dump. We're now in consolidation. so there's no point trading it. So what I'd be looking for now, after you've taken these two trades, is for today to close. And it does look like we're closing as a first red day, obviously unless price does something crazy at the end of the New York session. But we are looking to close as a first red day after 3 days up. So we've got the pump, 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 first red day. We'd be looking for the consolidation, which at the moment, we've got lows down here, highs up here. We'd be looking now for price to go into consolidation tomorrow and potentially present with a higher day to go down lower. And we did have a spike of the previous week's high. That was the previous week's high. So now we could be going to the previous week's low. And as you can see here, this is a pump and dump setup. So price could fall lower today and take out the lows already with no trade setup. But if we do go into consolidation now and present a higher day, tomorrow it'd be a perfect first red day setup for me.